Today is Wednesday, June 22nd, and this is another look at RIMM and a follow-up to the video that I did 3 weeks ago where the Ichimoku system on the weekly basis was predicting further downward pressure. I've taken the Ichimoku off of this chart because it's just a red funnel all the way down. So let's look at the fibs, and let's look at what the fibs might have told us. First of all, we're looking at data back to 2008, and these gray areas here, and 1, 2, 3, 4 of them indicate gaps. These gaps are going to be tough to fill if RIMM is going to try to make any kind of a rally. Not that I'm saying we're going to get back over $80 again, but we'd have 4 fairly big gaps to fill, and this one failed to fill on 1, 2, 3, 4, 5 occasions. If we back up and look at back to 2004, we are currently trading at 2004 levels. If that doesn't scare you enough, let's take a look at what the fibs told us could happen and how accurate the fibs have been here. This is a fib that takes a low point here and a high point here. So the cycle that we're going to try to use as a retrace is this one. And we did retrace, and we came down to fully 100% retrace here, did a little move up, came back to a retrace here for 3 or 4 days, and then we failed. And then we came into a skidded, almost a cartoonish stop at 127.2%, just below earnings. These fibs of 27.2 and then 38.2 in the golden ratio are there for a reason. And price recognized the 27.2% from this movement and stopped there just before earnings. After earnings, we had a severe gap that took us down below the 38.2, and pretty much we can say that it was a touch of the 161.8 negative golden ratio. That's within 50 cents of that. Now we've taken a bounce up yesterday and a doji today. Because we were at that golden ratio, it's almost required in fib trading that you're going to see a bounce at that level. And we saw a bounce with this kind of volume, but we didn't see a follow through today. Okay, today was an FOMC day. Let's give it a break. But let's watch tomorrow. Tomorrow we need to see volume higher than this. We are going to run into the gap, and moving into the gap is not going to be accomplished on the first test. It's going to take a few tries, but let's just see how well we do fighting this gap. We also had a pierce here 2 days outside of these very wide Bollinger Bands. I set these at Anne Marie's levels for swing trades, which is 30, and the means are plus or minus 2.5, and we're still touching those. So if we had a regular 2 or 20 Bollinger Band, we'd be outside of the 20 now. The negative volume index is supposed to be what smart money is doing, and we had this period where smart money was not doing anything, neither buying nor distributing the stock, but now we've definitely gone into a distribution mode. And in this bounce up of these 2 days, there's no indication that smart money was buying the stock. So it's still too early to get back into this. If you haven't gotten out of RIMM yet, do yourself a favor and set a stop at 25, just below 25.42, because once we break that, we could go down to test the 200% level, which I haven't even bothered to draw yet.